Hey, how's it going, everybody? Mike Weber here, your South Bay and Los Angeles realtor, here with your real estate market update for the beginning of April 2022. So unfortunately, for many would-be home buyers out there, we're kind of off to the races again in that home prices are accelerating upwards, interest rates are higher, and inventory remains incredibly subdued. Across the board, the market is still similar to what we were seeing last month, but dramatically worse than it was a year ago, in that there's very little inventory out there, and it's just an extremely competitive market for buyers. Now, a lot of people were kind of expecting the market to soften up a little bit as rates rise, and unfortunately for the county of Los Angeles, that is not what we're seeing. We're seeing, again, a large increase in home prices. The South Bay is still relatively flat compared to Los Angeles County as a whole, but I would imagine as long as interest rates remain, roughly where they're at, because of the low inventory levels, we're going to continue to see prices rise until something changes. So let's go ahead and take a look at the actual data and get a sense for what's going on. We'll start out in Los Angeles County as a whole, and then we can move on to the South Bay beach cities and see what's happening there comparatively. Okay, so let's get started with Los Angeles County median home prices. And we were kind of trending flat for a while, if you guys remember from previous videos, but we are seeing now a pretty substantial uptick in median home prices. We're now up 12.3% year over year. This is in the face of the slightly elevated interest rates that we've been experiencing for the last several months. And it looks like as we're just about to hit peak selling season, prices are going to start rising again because there's just nothing out there for buyers to buy. Moving on to the supply of inventory in the county of Los Angeles, unfortunately, we're still in the same scenario we've been in for the last couple years, where it's just been getting worse and worse and worse progressively every year. Now we're at 1.4 months supply, which is extremely low from a historical sort of standard. And we're down 33% compared to where we were just a year ago, which was already a year where inventory was much lower than the previous year. So as you can see from the chart, we just kind of keep heading downward into the abyss of no inventory out there for people to buy. Now, the good thing is, as we'll look now at closed sales, those are doing pretty good, which is a good sign. That means that the inventory that is going on the market is being bought up quickly, efficiently, healthily. So the market is still functioning, it's still moving. And of course, that makes sense because prices are once again rising. Now, let's transition to the South Bay beach cities and see how that compares to the county of Los Angeles as a whole. And for median home prices, we're not really seeing the same uptick yet. In fact, we are still seeing kind of a horizontal trend in the chart. Prices have remained pretty stable for 8, 9, 10 months now, which is kind of interesting. The real question is going to be, are we going to start to see the same thing that's happening in the county of Los Angeles also happen in the South Bay or not? I would suspect as we start to head more into peak selling season, prices are going to have to start rising again because there's not a lot of inventory out there. Now, if we look at the comparison to where we were last year in April, we're only up 4%, which is pretty modest, when taking into account some of the recent years' massive gains that we experienced. And if we take a look at the inventory levels in the South Bay, here's where we see we're still kind of in that same situation where it's really a big problem because we're at 1.2 months, which of course is extremely low, and we're still down about 30% from the already low inventory that we were experiencing in April of last year. So the picture has continued to remain pretty grim. And what this really means is that for home buyers, there's very little opportunity out there. There's not a lot of options. And generally speaking, there's going to be a lot of competition for any properties that are desirable, that are priced well. Of course, in any market, there's always going to be properties that are overpriced or maybe aren't that desirable for some reason, or maybe have other issues that are going to cause buyers not to write offers on it or go after it as aggressively. but the general market is going to be moving really quick. We're still seeing a lot of offers. In fact, one of the things I've been seeing becoming extremely common here in Los Angeles is completely non-contingent offers, which really wasn't a thing here. It was a thing in other markets around the country, but I'm starting to see that become a thing here where going in, a buyer is just saying, no matter what happens, we're going to buy the property or we're going to lose our deposit. We don't care about inspections. We don't care about reviewing disclosures. We don't even care if our loan goes through, because a lot of times they actually have a loan that needs to be approved. And then of course they don't care about appraisal either. Finally, if we look at closed sales in the South Bay, we see that we are still down 11.2% compared to where we were a year ago. But that is pretty healthy closed sales. That means that whatever is getting listed is obviously going under contract and coming off the market and closing very, very quickly. So I hope this information was useful. If I can help you or any family or friends with any real estate needs that you have, definitely reach out to me. I'm here to help. Appreciate you guys watching, and I look forward to seeing you on the next one. Take care.